Thank you for this opportunity to talk about this topic. It's a topic that a number of us at MSU and beyond have been working on for some time now. So in addition to the names that you see, on the first slide of this PowerPoint, for those who contributed directly to this material that I'm presenting here, we've been working with University of Pretoria, Freddie Meyer, and Ulama Traub from Stellenbosch actually on this. Steve Hagblade of Michigan State has been very engaged on various elements of this. So there are a lot of people looking at this issue, which, as I say, is observations on, the African diet transformation that we see happening and some of its implications, okay? So that's what I'm going to be talking about. The approach that we use kind of starts with the idea of the rapid urbanization that's been going on in Africa for quite some time, a number of decades, paired with the more recent phenomenon over perhaps the last 15 years in many African countries of quite rapid per capita income growth. And when you put those two factors together, urbanization and income growth, you get quite profound changes in diets, in the amount of food that people demand, and in the types, critically the types of food that people demand. And this diet transformation then requires, if it's going to be able to continue, and also kind of to some extent helps drive other transformations. By that I simply mean that other levels of the agri-food system, the farm level, the transportation, processing, marketing, these also need to undergo transformations if the new foods and the volumes of foods that are being demanded by the consumers are to be produced and made available to them. So it's the diet and other transformations that get unleashed by this process. And of course, this is affected then by public policy, by public investment, which affect private investment. All of this kind of feeds back into this dynamic. And, in the end, everything is affecting everything else. But we do give a special emphasis, as I said, to urbanization, per capita income growth, driving demand growth, changes in demand, and as we call it, the diet transformation. So, this has many implications for, what value chains are likely to be growing, what types of private investment are going to be needed in those value chains, employment impacts, questions of sustainability, energy use, and water use. These new diets tend to demand more of both, more energy and more water. There are important nutritional implications, many, okay? I won't be talking about all of those here, but I'll touch on some of them, okay? So, 4 basic points, if you will, in this presentation. First of all, some brief comments on African urbanization and income growth. I'm going to say that African growth is not being captured just by an urban elite. I'll talk a little bit about agribusiness opportunities that emerge from this, and saying that the growing and changing demand among the poor, and this is one of the most interesting findings, I think, these changes among the poor are driving major agri-food system changes now as we speak. Regarding the issue of imports and whether all of this new demand is going to be just kind of taken up by imports or satisfied by imports and not local production, I'm going to make the point that I think the story is very mixed. I don't think we know the whole story, but I will say that I don't think it's necessarily a cause for the generalized alarm that some have sounded about this issue. And then finally, just make a few comments about jobs. Employment is one major implication of these agri-food system transformations, and the point I'm going to make is that it's very important, I think, that we distinguish between the stock of jobs now and in the near future, and in the flow of jobs, meaning the new jobs that are going to be coming on, okay? And this is focused on East and Southern Africa primarily, not all of Africa. It's in this area that we've done most intensive work. So regarding urbanization, Africa's urbanizing rapidly. I mean, there could be a whole seminar or a whole day on African urbanization, so I won't do that. I'll simply say that by nearly every indication, Africa is urbanizing rapidly. And we have shown that this is occurring more rapidly in smaller cities and in towns than it is in large cities. So we're getting a fairly dispersed pattern of urban population growth in Africa, which has a lot of positive implications. One of them being that it makes it easier to strengthen and develop rural-urban linkages, which are one key way out of poverty. A little factoid, if you will, here is that urban demand, even in East and Southern Africa, which is the least urbanized area of Africa, urban demand for food is already more than 50% of the food market, okay? And if you get into West Africa, this becomes 70%. And of course, these figures are only going to increase over time. So the point here is that food security, including very much rural food security, because it's about incomes and not just food itself, it's about the ability to gain access to food. Urban and rural food security is increasingly cannot be separated from the issue of rural-urban supply chains. Okay, on the topic of income growth, again, there are many things that could be said here. The point that I'm going to make is that in East and Southern Africa, the equity of growth, in other words, the distribution of income growth around the existing income distribution, has been generally unequal. This means that those in the upper portions of the income distribution have, in general, been getting higher percentage growth than those lower in the distribution. So in general, yes, inequality is increasing, but B, it is not increasing everywhere. Countries like Malawi and Rwanda over the past 10 years actually saw decreases in inequality due to growth. Lower income households got more percentage growth than higher income. And it ranges up to very high levels of inequality. So it's generally unequal, but not unequal everywhere. And even if we take the pattern, relatively unequal as it has been over the past 10 years, and we project that into the future, it's been broadly distributed enough that it will drive very major changes in the system, in income levels, and in demand for food. So this next slide just shows the distribution of population in 2010 in income classes, including the $0 to $2 per day, purchasing power parity per capita international poverty line, which as of 2010 had nearly 3/4 of all the population in East and Southern Africa. If we just simply project forward the level and pattern distribution of income growth over the past 10 years, if we project that forward to 2040, we see that by that time, less than 20% of the population will be under that international poverty line. So, would we like to see more equal growth in Africa and in East and Southern Africa? Yes, for sure we would. But even if it continues as it's been going, there will be a great deal of poverty reduction, and this will have major impacts on food demand, on the diet transformation that we're talking about. Okay, so next section here about agribusiness opportunity. So just to give you a little bit of background on what we did, we took LSMS data sets from Ethiopia, Uganda, Tanzania, Mozambique, Malawi, and Zambia, and we took all of the food items observed in those data sets, and we classified them in several ways, but the way I'm focusing on here is, as you see on this slide number 14, into a matrix of 3 processing levels: unprocessed, processed with low value added, and processed with high value added, and then crossing that with whether the products are perishable or non-perishable. And so we have a matrix of six different categories. And this is just to let you know the kind of categorization that we did that's going to be informing a lot of what I talk about over the next few slides. And this one here just gives you the top, the most important food items in each of those cells of the matrix. Okay, so the story here is the rise of processed, also perishable, but very heavily the rise of processed foods. And we find that these processed foods have penetrated very deeply across the population. They currently have nearly a 70% share of all purchased food across rural and urban areas, and very broadly. So we see this penetration having occurred, as I said, not just in urban areas, but also in rural areas. and not just among the upper class, but among the poor as well. So it's not just an urban elite phenomenon. So we find this fairly broad and deep penetration, and we find that there's dramatic change in the direction of these processed foods, very low in the income distribution. So this next figure shows the results of some just nonparametric, what are called nonparametric local area regressions, if you will. For each of those 6 lines refers to the 6 cells of the matrix that I showed a couple slides ago, and they show the food budget share, the share of all expenditure on food that goes to foods within each of those 6 categories. Okay, so the point is not to look at each individual slide here. I'll take you to the next one where I block off the portion from 2 to 10. The point here is, you see, between 0 to 2, in other words, below the international poverty line of $0 to $2 purchasing power parity per capita incomes, every one of those lines is sloping either rapidly up or rapidly down, meaning that diets are changing very rapidly in this 0 to 2 portion. And then when we go up to the 2 to 4 portion, we see those lines beginning to kind of flatten out, and in the 4 to 10 and on up from there, you see some change, but you don't see nearly the rate of change that you saw in the 0 to 2 portion. So if we now look at slide 20, the way I put it is that most diet change, as we have measured it in that matrix of 6 categories, most diet change has actually already occurred by the time a household rises up to the international poverty line. And I think this has to count as a major surprise that there is this much diet change going on among the poor in Africa. So we took one more step here. I'm now on slide 21. We took one more step and we said, well, okay, so there's a lot of diet change going on in that group, but that group is very poor. They're not actually spending a lot of money, each of them. So which group, in other words, people at what income level are actually having the most impact on food system change? And again, we're looking at diet change causing structural and other changes in the food system. So what we did was we first calculated the velocity of diet change, which was simply the sum of the squares of the slopes of the 6 budget share lines that you saw in the previous slides. And then, at each point along that distribution, we took that sum of squares, which is the velocity of diet change, and we multiplied it by the total food expenditure at that level. So the population at that level, their per capita expenditure, giving their total expenditure, we multiplied that by the velocity of diet change to get a measure of the impact on food system change all along the income distribution. And what you see then is what you see in slides 22 and 23. That shows the result of this exercise. The higher the line, the more the impact on food system change. And again, what you see, it's this group, even below $2 a day, that due to the very rapid rate at which their diets are changing, and due to the many, many people that are at those income levels, this is the group that's affecting agri-food system change now in Africa, okay? So we think that this has major implications for structural change, as it says there, over the coming decade. It's not going to start in 10 or 20 years. It's happening now. Okay? And so then in thinking about the future, we have done some projections, but I'm not going to present that here really. But what I am going to present is in starting in slide 24. These are expenditure elasticities, again, for the 6 food categories that I presented earlier in the matrix. And what we see then on slide 25 is that for high value-added processed non-perishable foods, and then for both high and low value-added processed perishable foods, expenditure elasticities of demand are above 1. This, technically qualifies them as luxury goods. It means that their share in consumption is going to rise over time. And when you combine it with population growth and income growth, it means really explosive growth in the level of demand over time for these types of products. Okay. All right, and this slide 26 then, is a result of kind of our baseline projection on how much consumption might rise between 2010 and 2040. And what we find then is, in every case, for perishable unprocessed grows more than non-perishable unprocessed. Perishable low value added grows more than the non-perishable, and the same thing on the perishable high value added. So you have a perishable story in addition to the processing story. Okay. So what we have is very rapid increases in demand for processed foods and also for processed perishable foods happening now in Africa, and we think it's going to be very rapid over the next decade and more. Okay, so then, big question. This change in the system, from one perspective, what it represents is huge market opportunities, huge business opportunities for anybody who can produce and market and present to consumers the types of processed and perishable foods that consumers increasingly are going to be demanding. So the big question then is, well, is all of this new demand and higher value added and potentially very profitable demand going to be captured by imports, by big companies in South Africa and Europe and elsewhere, or is it going to be able to be captured by local firms? Okay, so I do not have an answer to that question. I'm not going to claim that here, but I am going to say that the story is quite mixed and perhaps not as alarming as some might think that it is. Okay. So anecdotally, first of all, we see in places like Lilongwe and Dar es Salaam, when you go to markets there, you find lots of locally and regionally processed foods available, not just in open-air markets, not just in shops, but also in supermarkets. You see small, medium firms with their processed food products on the shelves, in markets, in small shops, and also in supermarkets. This in Lilongwe and Dar es Salaam over the past couple months, as I've seen. Maputo, however, is a very different story. You go there to the markets, into the supermarkets, and you see very few locally processed foods. They really are heavily imported from South Africa and from Portugal, in this case, and other places. We're not sure about other cities, but we're launching studies in Tanzania and Mozambique and elsewhere that will look at this issue in at least 2 cities in each country. Here we took net agricultural imports, so agricultural imports minus exports, okay, of East and Southern African countries, and we expressed them as a share. All this is in value terms, a share of agricultural production. This FAO stat data from 1980 to 2011. So what do we find? We find, first of all, that Botswana, of course, is importing much more food than it is producing. This is not surprising. It has very low rainfall, does not have good agricultural production conditions, and it has very high income. So this is really not a surprise at all for Botswana. The next country with the highest level of imports relative to production is Angola. And we see that up to the end of the war in the early 1990s, their net imports were equal to or even 50% higher than the total value of their production. So they were heavily import dependent. That has begun to fall quite steadily since the early 1990s, although we don't have information since 2006. So let's take those 2 countries out of the picture, and let's look at the next graph. I'm now on graph 38, on slide 38. And here we see 2 countries with worrisome trends. We see Mozambique, where, again, the ratio of net imports to total production is rising pretty steadily, all right? And we see Kenya, which is moving from a very strong net positive trade balance, those negative figures mean that they were exporting more food than they were importing, to barely a positive trade balance in 2010. So those are trends that we might consider cause for concern. So let's take them out and let's look at the rest of the countries. This is now slide 39. What we see is for the rest of these East and Southern African countries, the line is basically flat since 1990. Okay, and on average, they're at about a trade balance or a neutral trade balance, or potentially slightly positive. So certainly for these countries, the trends with this FAO stat data are not alarming by any means. So there's much more analysis that needs to be done on this, especially looking at high value imports and not just all imports of food. I'm not claiming to have a full answer to this question, but I'm suggesting that perhaps the situation is not as dire, not as alarming as some are saying. Okay, final bit here on before kind of putting out some conclusions is on jobs. The point here being we need to distinguish between stock and flow. So the point is this. Big focus now in Africa, given the youth bulge because of its demographics, is youth employment and the desperate need for employment for youth. And if that is our interest, if we are interested in youth employment, then we need to be looking not just at the stock of jobs, in other words, the level of jobs in different sectors of the economy now and in the next 10 and 20 years, but we need to be looking at the flow of jobs. In other words, where are new jobs, where in different sectors are new jobs going to be emerging? So that's what I mean by the stock, the level, versus the flow, that being the change, okay? So this next graph, it's slide 42, takes data. It's based on Maggie McMillan and Harkin's estimate that between 2000 and 2010, the share of the workforce in agriculture in Africa fell by 10 percentage points. So if you put that together with population data and take it back to 1990, then this is what we see. The green line is level total employment in agriculture. The red line is total employment outside of agriculture. We see that in 2010, there was still a lot more employment in agriculture, most of that being smallholder farms, than there was outside of agriculture. That's the levels story, or the stock story. But look at the next figure. If we look at change since 1990, and in other words, where have the new jobs come from, we find that between 1990 and 2010, there were essentially an equal number of jobs created off the farm and on the farm, okay? Just about equality since 1990. And if we look between 2000 and 2010, we see that about 3 times more jobs were created off the farm than on the farm since 2000. So these are the exact same data that many people are talking about, but the focus tends to be on the stock of jobs and on the fact, which is indisputable, that even 10 and 20 years from now, most of the population is still going to be employed in agriculture. That is true, but it is also true that the rate of change in jobs and the absolute number of jobs being added now are much higher off the farm than they are on the farm. And so I then went to the work by Louise Fox et al. For the World Bank report on youth employment, the background papers for that, and they use different data and they use different methods, and they have results that are almost identical to what I presented in the earlier figures, extrapolating from McMillan and Harkin. This shows new jobs their estimate of new jobs between 2005 and 2010. What do we see? We see, I'm now on slide 46, that 70% of all new jobs that came into existence between 2005 and 2010 in sub-Saharan Africa occurred off the farm, okay? This is about identical to what I kind of calculated myself in the earlier graphs. The other big story here, I think, the 2 points that people tend to take out of the work by Louise Fox and her team, which is fantastic and very comprehensive work. The 2 big points that tend to be taken are agriculture is going to continue to dominate employment now and into the future. I've shown that that's true, but it is not going to dominate new employment. And the second point that tends to be taken from all of this is that wage jobs, formal sector wage jobs, are now such a small share of the total that even if they were to grow very rapidly over the near future, they're not going to be that important in the economy. But if we look at slide 47, it's just highlighting the fact that between 2005 and 2010, there were nearly as many jobs created in employment, in wage jobs, nearly as many wage jobs created as there were jobs in agriculture. I think that's going to be quite surprising to most people. And it's something that we need to think about, and the implications need to be thought about quite a lot more. This is not to argue against the need for productivity growth in agriculture, for investment in smallholder agriculture, but it is to reflect what I think is simply the fact that now, in moving into the future, most of the new jobs are going to be occurring off the farm, not on the farm. Okay, so to finish up here with just a few slides on implications, we've said that the change in the agri-food system driven by diet changes in demand for food among the poor, that this change is happening now, okay? And that it presents huge opportunities for farmers, traders, transporters, processors, business people in Africa. Question then, what does Africa have to do to get the whole agri-food system productivity growth needed to capture these opportunities? The point here being, yes, we need farm-level growth, absolutely, without question. But we also need productivity growth in transport, processing, packaging, distribution, etc. This productivity growth needs to happen throughout the food chain, okay? I think we do see an emerging quiet revolution, which we are now engaged in studies to try to document. By the quiet revolution, I mean the rise of micro, small, medium-scale local firms that are producing products to fill this market, okay? Products that were not produced 5, 10, and 15 years ago. The fact, however, is that there are a lot of non-Western, very large multinationals that are already in this market. The Olams, Export Trading Group, and others, all of the South African firms. And, companies like Walmart, Carrefour, Nestle, Parmalat are in the market, and Walmart and Carrefour, for example, are poised. They're in a fairly moderate way now, but they are poised, if they see growth being very rapid, they're poised to really ramp up their presence in this market, okay? So the question then, I'm now on slide 50, can local micro, small, and medium firms compete, okay? And this matters a great deal to the issue of employment, because in general these micro, small, and medium firms are going to be quite a bit less capital intensive than the large multinationals, meaning that they're going to employ more people per unit of output, and employment is what Africa needs right now, okay? So I know Tom Reardon's idea of first proliferation and then consolidation of the number of firms as economies transform in this way. And so, and here I'm just throwing out ideas. I think we need to be thinking about these things. Can the consolidation phase and the type and the time at which consolidation starts, can that be delayed? Can policy promote the rise of local micro, small, and medium firms, help them be competitive to stay in the market longer, keep employment up for a longer period of time so that the period of consolidation and employment decline doesn't start until there are jobs elsewhere in the economy where people can go, okay? I think this is now the final slide. The last question is, of course, if farmers can't respond to this challenge of not just new foods and different foods, but more food being consumed, then the rest of the system isn't going to be able to respond. It's going to have to come from imports. So can farmers respond? Here, rural-urban linkages, as I said at the beginning, are going to be fundamental. Roads, information, urban marketing infrastructure all need to be improved. We also need new models of governance of marketing infrastructure. Much of the governance of public wholesale and retail markets is quite dysfunctional at this point in Africa. I think policy needs to move from the heavy emphasis that some countries see now on subsidies, which are not really recoverable, to productivity enhancers. I would say that, I initially presented this when others were presenting, for example, Tom Jane on transformations at the farm level that are going on in Africa. So I would just say that, the declining agricultural workforce ratios that we see documented by Maggie McMillan, the transformations that Tom Jane and others talk about at the farm level suggest that some of this transformation has begun, but much more work needs to be done. So, thank you very much. That is the presentation for now.